Today's complexity demands greater simplicity. Tom Perry. My friends, that's what we attempt to do. I think we attain on a daily basis is we take the complexity of the marketplace and break it down into simplicity, thanks to the fact that we have these wonderful charts. You know, you go back 20, 30 years ago, you didn't have the ability to see in real time what we have to see for free. You know, freestockcharts.com is free. TC2000, which is the paid version that you see us use every day, a few dollars a month. It is amazing. And of course, when we talk about complexity, when we talk about simplicity, you know, we have so many choices when we look at something like TC2000 or freestockcharts.com. Virtually every indicator you can possibly imagine is there. Do we use them all? No. We take all of that potential complexity and break it down to the indicators that work and work best. That is the MACD, that we use the percentage version of that called the price percent oscillator, the percentage version of the moving average convergence divergence indicator, and the derivative oscillator, which is a triple smoothed version of the relative strength index, coupled with Heikin-Ashi candlesticks, Bollinger Bands, and trend lines. We have all sorts of great stuff. So let's jump into these charts. What do we see going on? We see stocks down a little bit for the day, bonds up, gold down, Bitcoin up. Let's first start with the S&P 500. Ended with a higher week than the prior. Of course, our jumping in point way back on the 9th of April. That seems like a long time ago. It's not. But that week, our jumping in point was somewhere around the 407 mark. How high have we gone? The high 420. So again, where did you put your profit and loss bands? Have you taken profits? Why have you not? If you haven't, what are you waiting for? How high will this go? What's your reasoning? That's really all I'm asking. And of course, it is your trade worksheet that allows you to work that out to begin with and then to follow up with that as you move along. At the end of today's video, I'm going to put how to use the trade worksheet. If you don't use it when you do practice trades, my friends, you're missing about 90% of what you ought to be learning. So please use the trade worksheet. I will attach at the end of today's video the video lesson we have on how to use it. And of course, the trade worksheet, daily market worksheet, weekly market worksheets, those are all available where? They're in your show notes every day. Go to chartingwealth.com, sign up for free. You will get our daily reviews plus all those show notes in a quick email we send out at the close of every market when we get the show done. That is where we are as far as my lessons go for the day. Let's look again at where things are going. Price percent oscillator flattening, derivative oscillator heading up. 2-day chart. We see that it is still positive, but it looks like that price percent oscillator is trying to move down. So is the derivative oscillator. It is moving down. But look at where our Heikin-Ashi candlesticks are. Things are still moving up. This latest 2-day candle that completed, we see that it is above the 2-day trend line and just there peaking above the weekly. So that's still good, but we are seeing some weakening. Hopefully the next week will start off strong. Look at this. You see how things had peaked and then rolled down on Friday, touching the 2-day, still above the weekly. That's on the half-day chart, so pay attention. Of course, the derivative oscillator went negative at the end of the day. That's our smallest chart. It's not the one we fret over the most, but the 2-day and then, of course, the weekly, all things being equal, the market moves in which direction? The direction of the largest chart, which is the weekly. Always keep that in mind. That's your most important chart, but it's all the chart all the time so that we don't miss anything. All the charts all the time. What about the Qs? Down 0.66%. Again, reaching a higher high during the course of the week. Green up candle, but a slowdown. We can see where the price percent oscillator is just laminated right on that red signal line, derivative oscillator moving up. So again, be careful. Where did you set your profit and loss bands? What are you waiting for? The 2-day still positive, still right there on the 2-day trend line above the weekly. Price percent oscillator positive, but heading down. Derivative oscillator positive, losing energy. And we look at the half day and we can see that, heck, it crossed over going down way back in mid-April. Then hammered down for 2 days, slid sideways and up for a few days, and over the last few days has been moving down, piercing the weekly and the 2-day trend lines in the morning on Friday. So pay close attention as we start this next week if you are in a Q's trade. And I have a mea culpa, my friends. We had a weekly vertical crossover setting up. I talked about it all week, but guess what I didn't fire off? I didn't fire off the texting service to tell you on Thursday night. I apologize to all of the people that have signed up for the texting service. I dropped the ball and failed you. I was so excited about finding 10 potential up moves and 10 potential down moves. Those were weekly vertical crossovers for the Patreon members, and getting all of that out. It wasn't easy to find 10 potential weekly vertical crossovers going up this week on the S&P. I was so excited about doing that I forgot to do this for the rest of you. Please forgive me, but we did have a weekly vertical crossover. Not super excited about it right now, but we'll talk about it. We have a red spinning top. Prices hanging right there on that weekly trend line. I just redrew that. Not super exciting when we look at the weekly. We, again, red spinning top. We do have a legitimate crossover that has happened. We go to the 2-day chart. We can see that the price percent oscillators lost a lot of energy. Still heading up though. Derivative oscillator losing energy, has been for 6 days now. Big red down candle. Now, if you were looking to jump in at the end of the day on Friday, one reason I don't feel all that bad is I'm not super excited about the weekly vertical crossover because of both the weakness that we see as far as price movement goes, trend line, the kind of spinning top we have on the weekly chart, coupled with the 2-day, which again, 4 days of down movement, these last 2 days stronger than we have seen in quite a while. Got to go all the way back to March to see that. And of course, the derivative oscillator losing momentum, price percent oscillator is still heading up, but again, piercing the 2-day and the weekly trend lines. And then of course, we go to the half day. We see that things were up for the day, 0.23%, but we are seeing those other weaknesses now. What could you do if you didn't jump in and you still wanted to potentially ride up moves in TLT with that weekly vertical crossover and you didn't jump in on Friday? You can pay attention to how things go on Monday, on Tuesday, on Wednesday. You can look. If you see the 2-day chart gaining some energy, heading up, you particularly see things where they are right now continuing on the half day and crossing over, heading up. With improvement in the 2-day, that could sure give you a reason, piercing through the weekly and perhaps the 2-day trend lines as things start to cross. That can make you feel really good about the continued direction up in TLT. There are some of you who may have just gone ahead and laid that trade in there toward the end of the day. Again, I hope that you are tracking it, paying attention, filling out your trade worksheet, and learning by doing. The best way to learn. OJT, on-the-job training. Let's leave bonds, go to gold. Gold down a little bit for the day, 0.34%. Slow down in the up movements. What that red open box candle is showing us, prices above the weekly, below the 2-day trend lines. Derivative oscillator gaining momentum, price percent oscillator pulling away slowly from the red signal line. That's good. 2-day still heading up a little bit. Derivative oscillator losing. When I say 2-day heading up, talk about the price percent oscillator. Flattening very much so, but still positive, heading up a little. Derivative oscillator losing momentum. We do have a solid red down candle on gold. Of course, it's still above the weekly. Pierced the 2-day, 4 days back, the 2-day trend line. So again, that is a warning sign. We don't have the crossover going down yet. Haven't pierced the weekly, but these are things for you to note in your trade worksheet if you're in this practice trade on gold. What about the half day? It has been going down since the weekly vertical crossover, and it stayed below this trend line. Is that going to end? Well, we'll see. It starts getting close to and piercing the weekly. Perhaps it'll bounce off that. We'll wait, we'll watch, we'll see just how things continue to move as we jump into this next week. That's where we are on our big charts. I hope you've been filling out your weekly market worksheet. That's what that's all about. I'll put that. In fact, I'm going to put all three of the trainings on the weekly, the daily, and the trade worksheets at the end of today's video. By the way, for subscribers, we have a special training for you. It's in your show notes, dollar cost averaging, problems, and our solution. You'll get a kick out of that. And again, if you're not a subscriber, become one. Oh, by the way, Patreon members, don't forget this next Wednesday. Yes, this next Wednesday, the 5th of May, 12:30 Eastern Daylight Time, live question and answer call-in session. Hope you're going to be with us. Send us your questions and the ETFs and stocks you would like us to track for you, to do a little backtracking on, talk about for the upcoming live broadcast. If you can't join us, we'll, of course, endeavor, as we always do, to record that and email it out to you. If you're not a Patreon member and you're interested in, of course, our 3-part series charting, Options Made Simple, the Charting Wealth Way, you will love that. If you're interested in options, this is the starting place, the ending place. Give you everything you need at any of the 3 levels of Patreon support. You will get that first thing. Also, you'll get those 10 weekly vertical crossovers going up, 10 weekly vertical crossovers going down on the S&P that we chart for you every week, going through all 500 of those stocks, looking for them. And, you'll get all sorts of other things. Early training you're going to get, of course, we send that out first to our Patreon members, and of course that live question answer call-in session. Now, let's move on. Oh, and discounts on any of the special trainings that we do. It's been a while since I've done one. At some point, I'll get my energy up and we'll do another Accelerated Market Mastery. Lastly, let's go to Bitcoin. Up for the day, 4.76%. But look at the weekly chart. Red down candle, price percent oscillator heading down. It recovered a little bit. It was heading down stronger, but a couple of up days of movement helped. Derivative oscillator still trundling down. So the overall hang on Bitcoin is a tale of downward momentum. 2-day chart, a little bit of recovery over the last 4 days. We had a slowdown in the down movement with a solid green candle, and now a green spinning top, indecision tending up. It's good to see. Price percent oscillator, though, still negative. It's flattening. Derivative oscillator lost a little bit of downward momentum, so that's good to see after several days of down movement or down generated energy. And let's look at the half-day chart. Of course, it crossed over going up back on Wednesday the 28th, and then immediately back down, and then popped up on Friday. So we'll continue to watch and see. Just remember, on Bitcoin, you still have that overall push down on the weekly and the 2-day. That's all we have for today. Hope you have a wonderful weekend. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.